Hi, my dear buddies, Punarvas here. So, guys, today I'll be sharing a very interesting video on Cafe Coffee Day. This I had done in 2019, but this is a follow-up video of what happened with NFRA, that is the National Financial Reporting Authority. So, please watch the video till the end. So, please like this video and subscribe to my YouTube channel and share this video with many people if you like it, of course, at the end of the video. So my dear friends, please, it's a humble request, watch till the end because I'm going to explain some important areas today. So in the year 2019, in fact, when the concept of video classes started for me, that is when I entered into the amazing world of video classes. And one of the first videos that I did was an analysis on Cafe Coffee Day. So I had explained why Cafe Coffee Day is very important to me because it has been a very huge part of my journey as a chartered accountant. So after I became a CA and a trainer, I used to sit in these coffee days across Bangalore and prepare my notes, etc., because I could not afford an office at that time. So it, of course, I felt a lot of pain when the owner, VG Siddhartha, passed away by committing suicide. So I tried to analyze what just happened, what happened to him, and in the year 2019, I analyzed seeing various reports, etc., and this was the chart at that time. To lead to what exactly happened to him. This you can watch in the description. I'll give you a link. You can watch that video. It's an old video, 2019. But guys, a lot can happen over coffee, and that led to the death of Mr. VG Siddhartha because of many issues in PMLA, Prevention of Money Laundering Act. But after the post-mortem is what we need to do. Now, post-mortem of VG Siddhartha said that it was suicide, but what about the post-mortem of the company, my dear friends, Cafe Coffee Day? If you remember, in the year 2017, Narendra Modi ji had told that the CA, chartered accountants, are the doctors of the financial health of the company, of the economy, so to speak. So, of course, you have to do a post-mortem. So, in the year 2019, we had multiple scams. We had the ILFS scam, that the Infrastructure Leasing Financial Services, and before that we had the PNB scam. After PNB scam, Arun Jaitley ji said that one section which was not at all notified by MCA got notified, my dear friends, and that is the deadly section 132, that is the National Financial Reporting Authority, an independent body to look into the profession, as to the credibility of the profession and the professional work that we are doing and how professional are we as chartered accountants. So as you can see, it's a non-obstant clause which clearly says that, notwithstanding anything contained in any other law for the time being in force, the NFRA shall have the power to investigate. So this is the charging section, so to speak, 132 subsection 4 clause A, where they have the power to investigate such bodies, corporate prescribed thing, whether the chartered accountants are doing their job or not. And it also has the deadly power of the civil court. So it's a quasi-judicial authority and it can do anything. And of course, where the professional or other misconduct is proven, there is a lot of penalty here and can also result in the debarring of the member. So in the ILFS scam, in fact, that's the first ever, investigation which led to the debarring of a chartered accountant in practice. But having said that, these reports, etc., are generally not made public as well for public consumption. So I have gone through a huge report of NFRA. I got access to it. And after which, and if you see, this is a non-obstant clause, it overrides even any proceedings that are happening under the Chartered Accountants Act as well. So based on the report, my dear friends, let us discuss today what exactly happened in the NFRA investigation report and the aftermath of the same. So, of course, there was an investigation by SEBI as well. This, of course, went to the NFRA eventually, but SEBI also investigated because Cafe Coffee Day was a listed company. And exactly the modus operandi of Sri Vijay Siddhartha as to how he was the only person responsible for many things. Even in a suicide letter, he had clearly mentioned that I am responsible for anything that has happened in Cafe Coffee Day. A lot of things happened which has the PMLA angle, which you can watch the other video. Let's not go into that. But ultimately here, upon investigation, my dear friends, they came to know that there was a diversion of funds of 3,535 crores. That is, from CCD Enterprises Limited, from the 7 subsidiaries of Cafe Coffee Day Enterprises Limited to the Mysore Amalgamated Coffee Limited, that is MACL, is owned and controlled by the promoters of CCD. So basically, the modus operandi was CCD Enterprises had 7 subsidiaries, and through those 7 subsidiaries, all funds were diverted to MACL. This is a blatant violation of, this is the reason why, in fact, the Companies Amendment Act 2017 and also in 2019, the concept of layers came. That is, one holding company can have maximum 2 layers of subsidiaries. Because what people were doing, they were using the concept of investment company and subsidiary company to just invest through a complex maze of various companies. So basically there would be one holding company and there would be almost around 300, 400 companies like that. Investing companies, subsidiary companies, etc. So we never knew where the money went, right? It was very difficult to track the money. That's why these things came, and even 186 was amended. That is the Intercorporate Loan section of Companies Act, which was amended to say that if you have a company 1 and there's a company 2 which you have to invest, it can go through maximum 2 layers of investment company. So investment company 1, investment company 2, that's it. So here they said through 2 layers, and the holding company can maximum have 2 subsidiaries. So based on that, if you see, my dear friends, here, SEBI found out that the Cafe Coffee Day Enterprises, 7 subsidiaries of those enterprises were transferring to MACL, and MACL was owned and controlled by the promoters of Cafe Coffee Day. There was a diversion of funds to the tune of 3,535 crores. I mean, it's crazy. So next, the NFRA now, by the power vested under section 132 of the Companies Act, which I just showed you, started the investigation on the auditors for financial year 18 and 19, and these were the main points that were revealed, because I have analyzed the entire report. I'll show you this as well, but the main points that were revealed is, first one, non-compliance with standards on auditing. So as per Companies Act, as per section 129, it is very, very clear that the financial statements should adhere to the accounting standards, right? And of course, 143(9) also clearly says, apart from accounting standards, which anyway the board will check and the auditor has to see, you as an auditor, or as we as auditors, should follow the standards on auditing as per 143 subsection 9. So first investigation, the first part, they said that the company, the auditors have not complied with the standards on auditing at all. Which is a shocking investigative report on compliance. The second most important takeaway from this investigative report is that they failed to exercise professional skepticism or transactions to the tune of 6,958.91 crore. So my dear friends, we know in SA 200 we have studied that an auditor will not be a bloodhound, but he should be a watchdog, right? He should be a watchdog. To quote the C&AG in one of the talks that he was delivering when he was discussing the ILFS scam and the aftermath of the same, he was mentioning that I understand that an auditor need not check or need not find a needle in a haystack. So listen to me carefully. It is okay if the auditor need not find or doesn't find a needle in a haystack, but it is deplorable or it is really humiliating that he cannot see the elephant in the room. This dialogue was actually a slap on all of us auditors. So this was what he said. But ultimately, we've been learning that professional skepticism, just going there with an alert mind is something that we really need, which unfortunately is not there. So second one is fail to exercise professional skepticism. Transactions to the tune of, my dear friends, 6,958.91 crore. Let that sink in. Third, it is really a slap on all of us. They said very clearly in the report there is a lack of competence. The people who were auditing the Cafe Coffee Day and the entire group companies were incompetent to audit, was exactly the wordings that was there in the investigation report by NFRA, and of course with SEBI's, of course, inputs as well. Fourth one, all these auditors who were there in the company, of the company rather, of the group, they were also doing other services which are prohibited under 144, right? So you cannot do, as per section 144, you cannot do other services. So let me just quickly show you that. 144. These are the other services that an auditor is prohibited from doing, like accounting and bookkeeping, internal audit, actuarial, investment advisory, management services, etc. But unfortunately, the investigation proved that there was a nexus here and there was a conflict of interest. Auditor and non-audit relationship was there to a large extent. Fourth, attempt to deceive NFRA by adding or obtaining the, documents in the audit file. So audit documentation, though it is the sole property of the auditor, it should maintain confidentiality and it should not be fake. But here there was a attempt to deceive the NFRA by adding more documents at the time of investigation. And of course, nobody will charge you unless you've been given an opportunity of being heard. So when that opportunity of being heard was given, there was an attempt to manipulate the documents, unfortunately. So this was one of the observations, and failed to report understatement of loan of to the tune of 222.5 crore fraudulently given to MACL. So as we know, under section 185 and of course 186, 185 to the companies which are part of your group, etc. There are a lot of restrictions that you have to take special resolution, and the has to be a board meeting resolution under 186, etc. Many things are there, and it has to be unanimous resolution. None of that was taken, and it was fraudulently given to MACL to the tune of 222.5 crore. There was absolutely no due diligence and absolutely no compliance, unfortunately, which the auditors failed to report, right? Unfortunately. Next, failure to report fraudulent diversion of 130.55 crore to a company called the Classic Coffee Curing Works Limited. So even here, there was diversion of funds, complete diversion without head or tail, without compliance. It's without even knowing the nature of transaction. There was just, shifted to some other company. Then, of course, we always see that in audit report, there has to be material misstatement, right? And in the audit report, if he feels that the financial statements, there is a material misstatement, an auditor has to report. But if you see here, in the consolidated financial statements, the auditor failed to report a material misstatement to the tune of 132.37 crore. And the last, observation by NFRA is they failed to perform audit procedures to identify the misstatement to the tune of 69.77 crore. So if you see the magnitude of these things, it really is shocking to know. This, of course, we have derived after a lot of research on the, report, of course. These are the final takeaways, which makes it easy for me to convey to you. These are the takeaways of this NFRA investigation report. And material pervasive misstatements, you will see this in SA 700, 701, 705, and all these things to understand what do you mean by this material pervasive misstatements, right? And we understand through other standards as well. So, my dear friends, it is shocking to know that the falsely reported, as we all know, in section 143 subsection 2, read with, of course, 700, an auditor has to tell that the balance sheet and P&L and the affairs of the company are true and fair. The accounts are true and fair. So here it was not true and fair at all. Forget about being true and fair. It was not even true and correct. So if you see to the tune of, my dear friends, then that too, mind you, material pervasive misstatements to the tune of 7,514.1 crore. Let that sink in slowly, right? That is the problem. And of course, they falsely reported the financial statements as effective, though it was, of course, not effective, so to speak. So, my dear friends, this was what happened, and ultimately what happened was this. Now, let us just check what were the penalty on auditors. So, there was a CA firm called ASRMP and Company. Let me just reiterate that this is not to demean any chartered accountant. Just stating facts. This is not to demean anybody or to have a, I do not know these people, of course, but this is what the report had stated, and I'm just stating facts here, conveying the facts. Nothing negative about it, but we need to take it with a pinch of salt and understand where we are going wrong and why. Of course, the profession has taken is bearing the brunt of this shocking report, so to speak. So ASRMP and company, 1 crore rupees was the penalty levied by NFRA, and ASRMP and companies debarred for a period of 2 years of doing any statutory audit or any internal audit, my dear friends. A very, very dangerous precedent set here. And Mr. CAS Sundaresha, his personal liability again 10 lakhs, and he's debarred for 5 years from doing any audit. And 2 other people who later they were, they said that they were actually article trainees or either paid assistants, so to speak, CA Pranav and CA Madhusudan. Each of them have to pay 5 lakhs and they're debarred for 5 years. They're debarred for 5 years. So deadly, deadly. So how did this entire thing happen? And again, so to speak, coming back from the grave, VG Siddhartha, how it happened? The modus operandi of alleged diversion of funds. How were the funds diverted? Say he used to have certain authorized signatories, and he told these authorized signatories to sign just a bunch of checks and just with the amount and pre-signed checks basically of various ECD group companies. So he had signatories under him, and he just used to direct them that, look, you need to sign this check, that's it, and we will use it whenever required. So whenever the need arises, what they did, just deposit the check in somebody else's name and it went there. So to the tune of, as I told you, 3,535 crores. So 7 subsidiaries, and CCD of course is a public company. And of course what happened was just needed funds in some other company. So I got money in my company and diverted it there through pre-signed checks through various signatories. And it is shocking to know that the auditors did not find out all these things. Right, and that's why you see the penalty that is going on. So the auditors of the CDAGL for financial year 2018 and 19, that is Cafe Coffee Day, is ASRMP and company, which is in practice since 1/4/2018. I mean, it is in practice since many years, but of course this is what you say. It was the auditor since 1/4/2018. And CA Sundaresha was a signing partner, but the engagement partners who did the work was CA Madhusudan and CA Pranav. This is what was there. And of course, my dear friends, acceptance of audit regarding independence, disregarding independence also. Basically, as per SA 200, you have to be independent and you should not go against 144. Because if you do anything, managerial services, other services, you are directly disqualified. Under 141, you are disqualified from being an auditor. Unfortunately, CA Sundaresha's proprietorship firm had provided audit and non-audit services to not just 1, not 2, 29 entities in the group. So my dear friends, if you see 144, it doesn't mince any words. It says you cannot do anything directly or indirectly. And they have also gone ahead and told directly or indirectly means what? Through an auditor himself, through relative, through associated entities, to anybody who has the link with this particular, firm. And in case of an auditor being a firm, in this case, for example, through any of its partners, through its parent, subsidiary, associate, any other entity which has significant influence or control. So this is what I'm trying to tell. Significant influence or control. We'll come to the details of it very soon. So audit firm and signing partner daughter had provided audit and non-audit services to 27 entities in the group. There is a clear nexus, independence is being disregarded, but still unfortunately. So non-audit services to 29 entities in the group, and audit firm and the signing partner along with the signing partner's daughter, that is CA Sundaresha and daughter, had provided audit and non-audit services to 27 entities in the group. So this is the gist of the story, my dear friends. A very, very classic, deadly case. As I told you, somehow my heart goes out to Vijay Siddhartha's family, but these things are really wrong, really sad. And the auditors not, of course, unearthing these things, or maybe, shockingly hand in glove with the management, is something which is very, very shocking, so to speak. So let's see the basic details of which you're trying to understand. So Coffee Day Enterprises Limited, CDEL, diversion of funds, I told you 3535 CR, and it is given to whom? to Mysore Amalgamated Coffee Estate Limited, MACL, an entity owned and controlled by the promoters of CDL. NFRA initiated the investigations, and they said they failed to evaluate the potential conflict of interest, having audit and non-audit relationships along with the promoters, family members, and all this, whatever I've already reported. They failed to report the related party disclosures also in their entire entity, and failed to report understatement of loan, which we have discussed, failed to report fraudulent diversion of funds, we have seen all this, and failed to perform, as we have already seen, sufficient appropriate audit procedure to get sufficient appropriate audit evidence. We've been learning this in CA inter audit, CA final audit, but CR now. They failed to perform appropriate audit procedure to identify the misstatement of 69.77 crores in related party disclosure. So it was a blatant violation of 185, 186, 188, and the Ind AS, everything, and the standards on auditing, of course, SA 550. Dangerous, very, very dangerous, right? And of course, SEBI guidelines as well, because SEBI regulations also have a concept of independence, of course, that also was violated to the core. Thus, total material and pervasive misstatements is 7514, and they've given here that it is not true and fair view. It should have been an adverse opinion. How dare you give a clean opinion, clean report? Is the question here. So as we have seen, monetary penalty of all these people, debarred for 5 years. Unfortunate, nothing can be done. Yeah. So of course, VG Siddhartha, VGS, the chairman and MD of CDEL till 29/7/2019 till his death. VGS and his family reportedly owned around 10,000 acres of coffee estate through various entities owned and operated by VGS and managed by MACL, whose 91.75% shares were held by VG Siddhartha's father, Gangaya Hegde. Coffee Day Global Limited, CDGL, that is a subsidiary company of CDEL and the sole buyer of coffee beans produced by MACL. So MACL is at the top, whereas the, other companies, so to speak, you have the CDEL and CDGL. These are the other companies, and CDGL is a subsidiary of CDEL, and they were constantly purchasing, they were sole purchaser of all the coffee beans produced by MACL. So that's what it is. These are the subsidiaries, if you see, of the company CDEL, and it was diverted to MACL. These 7 subsidiaries: Cafe Coffee Day, that is Global Limited, then TRR, DPL, TDL, GVL, so many companies, and these are in crores what was, given. Outstanding balance on July 31st, 3535 crores was transferred to first MACL, and now you see the shocking thing. 3535 crore was further transferred from MACL to the personal accounts of VGS, his relatives, entities controlled by him or his family members, whose outstanding balances payable to MACL were 3238 crores. So basically, from these 7 companies, it went to MACL, and from MACL, it was distributed to various relatives. Guys, it's a listed company we are talking about. Just take a breather and understand what I'm trying to tell. It's a listed company, and it was just been, transferred loan here and there without following any of the provisions of, Companies Act. Shocking, right? Really shocking. So yes, as we have already seen, the modus operandi, and if you see, sale of coffee beans and other related products and services, coffee mending machines, selling coffee beans to domestic and overseas customers, all these things. Although it was an unlisted public company, that is CDGL, an equity of 1334.88 crore and a borrowing of 534 crore, and revenue was 1777 crore, and thus it falls under the jurisdiction of NFRA undoubtedly. As per Rule 3, there's a threshold, and it definitely falls there, even though it is an unlisted public company. So they called the statutory auditor the audit file of CDGL to understand what happened, and based on the examination, they gave them a SCN, that is a show cause notice. And these are the things that they told: failure to detect, disclose material fact, failure to report material misstatement, failure to exercise normal due diligence, and being grossly negligent, negligence of the highest order, obtain sufficient information, failure to invite attention to any material departure. Nothing. As we have seen in 129 itself, if you cannot follow the accounting standards, you should clearly tell the material departure, and you should ask why they have done that, right? Not done, right? And if you see, auditor in its independent audit report said, we conducted our audit in accordance with the standards of auditing specified under 14310, which was blatantly not done. Major lapses in the audit. Auditor's independence itself was disregarded. SQC1 not followed, SA200 not followed, 220 not followed. CA Sundaresha's proprietorship firm had provided audit and non-audit services to 29 entities, and the audit firm signing partner's daughter, that is Sundaresha and Associates' daughter, they had provided audit and non-audit services to 27 entities of the Coffee Day group. It was really crazy, so to speak. Then, while denying, so this was the reply by the auditors. Reply of the auditors, they said that why didn't you take the independence confirmations from the engagement partners, that is Madhusudan and Pranav, and shockingly the reply said it was inadvertently not obtained because Pranav and Madhusudan were paid assistants at the time, chartered accountants but paid assistants, and the client acceptance continuance form also was inadvertently not kept. This was the sheepish reply, unfortunately, by the CA firm. Right? And they also claim that the audit team was rotated, etc., but nothing was done actually. And they say that there are no common partners except CA Megha Sundaresh Andani, daughter of CA AS Sundaresha. Both firms act independently. This is the logic that they told when they asked. But when they analyzed the reply, NFRA found that AS Sundaresha has 81% share of profit in Messrs AS RMP, which clearly shows a nexus between AS Sundaresha and all the network firms, the daughter and of course the other firms as such. And of course the information obtained from CDGL that CA Pradeepa Chandra, partner of Sundaresha and Associates, represented as partner and gave presentation on behalf of AS RMP, which clearly shows that they are doing the other services as well. And of course CA Pradeepa Chandra C and CA Chaitanya Ji Deshpande, both the partners of Sundaresh and Associates, were involved in 47 out of 67 audit areas identified in the audit plan. Out of these 47 audit areas, 44 were not reviewed by any partner. So there is no quality control whatsoever. SQC1 also was not followed. So it was actually performed jointly by ASMRMR and Messrs Sundaresha and Associates. So ASRMR was a sole proprietorship, which came actually here if you see the chart. Apart from the audit also, it seemed like this came into practice only from 1/4/2018, only to ensure that they get to audit that particular company. That was what the investigation report says. So basically, when you had the proprietorship and the partnership of AS Sundaresha and company both coming together to do these services, it was more like a joint audit. Guys, this is a listed company and this is an unlisted public company with crores of turnovers. Think about it, right? But to hide this fact, both the partners of Mr. Sundaresha were named as external reviewers in the audit plan. Imagine. These facts, together with the fact that all three firms operate from the same office address, one office address, three firms, indicate that their interrelationship and lack of independence, still they have gone ahead and done all these things. They had accepted the audit engagement despite serious conflict of interest. The three are related firms actually, and they were associated with CCD for a long time. And also there is a familiarity threat. Of course, there is familiarity. They are there for a long time. Replies regarding steps taken to reduce self-interest and familiarity threat, etc., are mere general statements without detailing specific steps. Because when the NFRA had asked them what you did, no, we did. Yes, we did. That was the, did you take any steps? Yes, we took steps. What steps? Out of syllabus, right? So these were, unfortunately, it's sad guys, but this is what happened, right? And ultimately, the auditors were charged with tampering with the audit file to deceive NFRA. Guys, chartered accountants doing this. Very sad, and making it the audit file unreliable. And audit workings have also been done in editable Excel files without any security feature to prevent alteration. So anybody can alterate the audit documentation. And then by denying this charge, the auditors have replied that the maintenance of editable Excel is not prohibited in SA 230 and modification is allowed as per para 16. That they have only formatted those files to make it pleasant to view, and the workings maintained in loose sheets were compiled in Excel format. All that they've given. And they've also told that they've created two separate files, planning, compliance, and review summary, and deferred tax working. After the date, NFRA has asked for the audit file, so, and everything was clubbed and moved to a single file. That is trying to, hide their inefficiency, whatever they did. Along with the reply to SCN, auditors have also submitted additional working papers, and that they have inadvertently missed certain evidence with respect to their audit file. So for everything that they missed out, they just told inadvertent, by mistake, accident. Analysis of reply also, they said this is clear-cut tampering. There is no way that we could do. It's a clear-cut case of tampering is what they said. So this is the entire thing. Ultimately, considering the provisions of auditing standards and the affidavit filed by the firm, we do not find any merit in the submission of the auditors. And I will say that it is deficient. The working papers are also deficient, and they fail to exercise professional skepticism. Even the approval given by audit committee to the tune of 500 crores for purchase was unusual, because the company's own reported purchase was 70.9 crores only. So though the reported purchase was 70.9 crores, they got an approval of 500 crores. So the naked eye, recalling the C&AG's comment, correct? It's okay, you don't see the needle in the haystack, but see the elephant in the room. You have been giving loan of, you've just had a transaction of 70.9 crore, and now you have actually gone ahead and approved for 500 crore. What was the audit committee doing? Right? Therefore, it's a clear-cut violation of Section 188 of the Act, read with Rule 15 of companies meet MBP rules. That is clearly saying that you should take prior approval of the company, and if it is exceeding the threshold as per 188, you should take board meeting resolution, you should take audit committee approval. Nothing was taken. Nothing was taken. No general meeting was called. No resolution was passed to the tune of 1,794 crores. Again, they denied this charge, and they said that they did not conclude any fraud in the transaction. Is the fact that everything was given a general trade practice, generic answers. It was maintaining a normal current account, all those things. And again, the analysis did not sense any fraud because it was routine practice. And NFRA is saying, bro, are you kidding me? We are unable to accept this view. Correct? Revenue and at a negative net worth of 166 crores. MACL had neither the level of operations nor the financial strength to justify huge advance of 3840 crores to various relatives, etc. Right? Because it was a negative, net worth company. Therefore, we hold the charge on this count stands proved and uphold. The auditors have violated, see guys, 143.3E. Right, 143.12, that is regarding fraud reporting. 143.3, the normal, reporting that, accounting standards have followed, standards on auditing have followed. CARO 2016, SA 200, general provisions, 240, fraud, 315, 330, 550, related party transactions, analyzing the risk of misstatements, correct? Bringing about various steps in the planning to ensure that these risks are mitigated. All these things, not done. Crazy. So all these things, other things are fine. These are all the observations. This is where whatever main chart I made from all this analysis, it's a huge file. And again, you see, the audit firm was charged with lapses in constitution of the entire, engagement team itself. So Sundaresha was the signing partner, external reviewer. If you see, these two people are from the other firm in the same office. They were called as external reviewer. Madhusudan and Pranav were engagement partner, and Mr. X and Y. See guys, articles are protected at least. Names are not given. They are the articled assistant. But the person who actually audited it, who knows that his name is there in the NFRA report. One will be X, one will be Y. Correct? Yes. Sad. Very sad. So all these things happened. Many things all that I have clearly mentioned. Penalty I have given. All that I have seen, yes, imposition of penalty, 1 crore on Messrs. ASRMP, monetary penalty 10 lakhs, 5 lakhs, 5 lakhs, and all these things. This was signed on 12th April 2023, made public recently, and that's why I thought I will do this. Dr. Ajay Bhushan Prasad Pandey was the chairperson of NFRA, and full-time member Praveen Kumar Tiwari, and Smita Jingran, full-time member, Vidhu Sood, full-time member, secretary. Yes, so this is all. This is guys, membership number, all these things are given. Sad, very sad. all from Bangalore itself. Very sad. This is what it is. And the copy too, it is gone to everywhere. And you really think that these people will get, work in the future? No. So this was the entire thing, my dear friends, I wanted to share with you. This is the entire chart. So if you like the video, please subscribe to my YouTube channel, hit the bell icon, and please like and share this video to many people, because parting thought, my dear friends, ultimately auditors are respected, chartered accountants are respected. We have to look after the financial health of the economy. But of course, there are a few black sheep who give the others a very bad name in the profession. And video was not to highlight any of those things. This video was to highlight that how NFRA is breathing down the neck of ICI and chartered accountants, and why it is necessary for us to study the right way, work the right way, ethically, morally, and legally. This is what I want to tell you. So I want to know your views, honestly speaking. What do you think about everything? Where is our profession heading? What do you make of this NFR, and what is the future of a chartered accountant, and how we can salvage some pride and salvage some faith by the public, because we are answerable to the public, my dear friends. We are representatives of the public. We have to do it. So please let me know in your comment section. It will be of great help for me, and we will discuss. I will definitely see each and every comment and try to respond. So please make it interactive, my dear friends. Please come to the comment section and please do comment, share this video. Love you all. Thank you so much. So I hope you like my analysis. Thank you guys. Thank you so much.